is a tricky business, literally and figuratively. Often, people are interested in a field and don't know how to go about dominating it. And that's exactly what this video is for. Here's your guide on how to trade with options for beginners. What is trading? Let's take a step back before diving into the how of trading by learning what it actually is. Sure, we all know trading is the buying and selling of goods and services, an economic transaction with financial compensation or otherwise from buyer to seller. But behind this relatively simple definition, this complex world involves types of trading and trading markets and operations and charts and trading strategies, each tailored to its specific market. And all of that is pretty hard to navigate. The fact that trading is essentially what our world depends upon for economic, financial, and physical stability makes it one of the most important skills to acquire. And that's not even the only definition of trading. In financial markets, trading refers to the buying and selling of securities, such as stock trading. On a global scale, trading between nations allows consumers and countries to have access to goods they may have never had access to before. Words like export and import allow us to understand the business better. And similarly, such words exist for an aspirational trader, not exactly looking to trade on such a large scale yet. So, say that you know what trading is and how important it's been throughout history. Where do you start? What do you trade? What can you trade? How do you meet other people in the business? Well, fear not. That's what this guide aims to do. Let's break down everything that an amateur trader needs in their arsenal. Markets. But what does this mean for an individual who wants to trade? Well, first things first, you decide the market to invest in. This just means that you need to do your research about the trends and policies of trading markets. This includes looking into how different markets move, how they fluctuate, and their general dynamic. This you can do by reading charts and looking at price action. On a more emotional side of things, you need to prepare your brain from risk and failure and make sure that you don't expect yourself to be good at it at the very beginning. There are so many markets to look into. The stock market, which just involves buying and shorting shares of a company. The ETF market carries funds representing all sorts of sectors, industries, currencies, and commodities. These ETFs can be bought and sold rapidly or even be held long-term. The Forex market allows the exchange of currencies traded in pairs with many potential combinations available. After all that, the options market allows its participants to undertake positions in the derivative of an asset. This means that you're not exactly owning an underlying asset because the option price fluctuates with the value of this asset. The CFD, or the Contract of Difference market, is a hybrid of stock, Forex, and the options market that lets you place trades in a derivative product. Whilst it doesn't generally have an expiration date, CFD requires its participant to pay a larger bid than the actual physical market for a product. Even after all of this, there's a wealth of information on all markets, and almost all of it is inexpensive to tap into. Access to resources. It's important to not focus on one single aspect of the markets. You must learn information about trade that doesn't even seem particularly relevant, because the market is often turbulent, and you need to be prepared for most things. The books Stock Market Wizards by Jack D. Schwager, Trading for a Living by Dr. Alexander Elder, Technical Analysis of the Financial Markets by John Murphy, Winning on Wall Street by Martin Zweig, and The Nature of Risk by Justin Mamis are all great reads to understand the business. You can start to follow the market every day in your spare time and get up early to read price action on foreign markets. For websites, we recommend Yahoo Finance, Google Finance, and CBS Money Watch. For a more sophisticated look into matters, you've got the Wall Street Journal and Bloomberg. Operational perspective of trading. Now that you're well versed in your market research, time to look into the operational perspective. And what is that, you may wonder? Operations is basically the understanding of how the market works. What happens when you place the trade? What things like buy orders and sell orders mean? The terminology involved and how to use it, all this operational stuff is the backbone of trading. As in, these are the tools that support the execution of your trade. To be well versed in these, one needs to perfect two things: their research, which can be helped by the resources previously mentioned, and practice trading, but more on that later in the video. Traders live and die by price action that diverges sharply from underlying fundamentals. Technical analysis. You need to learn to analyze. This can be in the form of technical analysis, so you can look at price charts, a lot of price charts, or in the form of fundamental analysis, which tracks growth curves and revenue streams. But what are price charts? They're just a sequence of prices plotted over a specific time frame. Many prefer technical analysis though, as traders apparently live and die by price action that diverges sharply from underlying fundamentals. So, you must never stop reading company spreadsheets just because they offer a trading edge. Whilst all of this, it's very important to understand and analyze charts fully. In the trading business, there are many kinds of charts depicting statistical and other data-based information, and you must get familiar with all of them. Learn how different variables affect each other, and a great place to learn is TradingView.com. Learn what each chart's purpose is, how they depict data. And it doesn't need to be complicated. You can look at the basic definitions of each term like highs, lows, a gap, the open, the close, etc. And it's also important to note that you don't need to learn the complicated strategies that go behind the trades yet. You just need to comprehend the basic data. Paper trading. Now that you know how to read charts and analyze data, you can start thinking about real investment. But wait, there's still one thing you should do before diving headfirst into this now familiar territory. And it's called practice trading, or virtual trading, or paper trading. Whatever you call it, actually participating entails the use of a stock market simulator that has the look and feel of an actual stock exchange performance. This means you're following real-time market actions, making, buying, and selling decisions that form the outline of a theoretical performance record. This allows you to make lots of trades using different holding periods. Websites like Investopedia have free stock market games, and many brokers let clients engage in paper trading with their money entry systems too. This has the added benefit of teaching you the software so you don't press the wrong buttons when you're trading with real money. Other than that, it's always encouraged that you take classes taught by professionals. Risk management and strategizing. Once you're ready to actually invest and trade with your real money and have a relatively good grasp on the trading business, you can finally start considering strategies and risk management. Risk management, however, is the one thing that's imperative to calculate. Consider the mental, financial, and logistical demands required to fulfill a trade. It's absolutely essential to take into consideration the amount of financial fall you're willing to make. Often, people miss this step entirely and move on to strategizing, not realizing that this is a big part of strategizing your trades. Your practice trades have already helped you with this bit subconsciously. Along with that, your analyzing and chart reading skills will have helped you decipher a strategy you feel comfortable using yourself. So, where do you go from here? Open a trading account. Naturally, this is when you open a trading account. Of course, you could have done this at any point in your learning process, but now we presume you're confident enough to actually use it. Find a good online stockbroker and open a stock brokerage account. And if you already have a personal account, be sure to sign up for a professional trading account separately. Become familiar with the account interface and take advantage of the free trading tools and research offered exclusively to clients. A number of websites on the internet also offer virtual trading, brokers of which you can find reviews on. Happy trading! We hope you enjoyed this video. If you did, give us a like and share this video with your friends and family. Subscribe to the channel for more videos just like this and press the bell icon to get a notification every time we post.